The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time. We got about 24 minutes to go until the opening bell, and we got markets slightly in the red this morning. Google earnings slightly in the red as well. We got Disney earnings out. We got jobless claims. We'll get into all of it, but right now we got the markets slightly in the red. Seems like that's the case, right? A lot of volatility in the overnight sessions lately. We kicked things off down about 0.3% in the S&Ps. We were all the way down to 6,020, though. See that move? So we're 25 points higher. You were about 40 points in the red at about 5 a.m. Eastern Time. I was up early this morning as it was chopping around. S&Ps off by about 0.3% right now. NASDAQ 100, Google driving that market a little bit lower among some others. NASDAQ 100 down about 0.7% or 140 points in the red, 21,530. Dow slightly in the red by less than 0.1% or 25 points. And the Russell positive by 4. Crude back under $72 yesterday. Right? We were on the air when you got quite the acceleration. We've backed off a bit. You got crude trading off 80 pennies at 71.91. Gold's doing it again. How about 2,900, folks? 2,900 on that gold contract. Remarkable. Record prices never been said before. Before today, February 5th, 2025, gold's never traded above 2,900. Today it has. 2,901. Gold up another $9 right now. And you were up almost $25. You've given up $15 since about 5:30 a.m. this morning. Nonetheless, gold higher. Silver slightly in the red, but you see silver's acceleration at 33.21. We're negative by 26 pennies. And what do we have? Get a little bit of higher price and lower yield from that move, right? Check it out. You're talking about more than a full point from where we were yesterday, man. So you go from 108.20 to 109.21, and we're looking at a yield right now under 4.5, 4.47. So what do we have? We have lower yield. That's leading to a weaker dollar at 107.57, and that's putting an impetus for gold to trade a little bit higher to the 2,900 area. I'm going to back this out a little bit on the dollar. Longer term, quite a reversal. And we'll see at a critical level, as you can see, right? Where are we back to? We're back to basically right where we were in October of 2023, folks, about a year and a half ago. Remarkable, right? 107.348 was the high there. We traded to 108 back in November of 24. You chopped around a bit. We've been pushing those highs. And yeah, right now we're trading at 107.54. We're going to talk to our man Teddy Kegstad at 40 past the hour, as we do every Wednesday. We'll talk some currencies. We'll talk some euro. We'll talk some commodities as well, as we always do. All right, let's get into some of the numbers. Google not living up to expectations. How about that chart? Before we get back into the short term, right? You talk about optimism. You talk about expectations. Google going from $88 to $207, but guess what? We're going to be down $15 on the open. And there's your acceleration lower, man. From 211 to 192. How much money are they going to spend? How about $75 billion? Where are we? Come on. Here we go. They're going to spend $75 billion on CapEx. Now, it's funny. Microsoft's out there at 80. Zuckerberg's out there with Meta at 65. Google comes in with what they think is probably the sweet spot. But guess what? Okay, nothing is slowing down when it comes to AI, folks. All right, we're talking about this. And there's your acceleration for NVIDIA. They're up more than $2 on CapEx from Google. Who do you think they're spending that CapEx on? Now, they missed on revenue. And combine that with high capital expenditures, and the market's a little worried. Revenues growing 12% overall. YouTube's advertising business slowed year over year. Not what you want to hear, because that is quite a driver in this company. They beat earnings estimates by 2 pennies a share, so they beat on earnings. Okay. Revenue, though, misses 96.47 versus 96.56, so they barely miss. Now, remember, when a company barely misses like this, all right, and I love Google. They'll be fine in the long run, but You saw what that chart looked like, okay? They got a lot of optimism priced in. There's a lot of accounting that can go into this. And when you're this close to things, they were working as hard as they could to bring this number as close as they could. Because, man, they would have loved to be above what the market was expecting, right? But they couldn't even do it. So be a little skeptical there. And how about CapEx? Market was looking for $58 billion building. No, they're going to spend $75 billion building out AI. It is quite a number, man. The company expects CapEx between 16 and 18 billion, higher than the 14.3 estimate. It is quite a number across the board, man. Up to 75 billion for 2025. Yeah, and that's what they talk about. So they're going to spend all this money, and they're not bringing it down on revenue. And how they're going to monetize that just yet? Don't quite have a plan. So Google investors this morning worried when they're spending that type of money. All things considered, though, the game has not changed, folks. Okay, DeepSeek has not changed the game. That's what I would take away from this week in particular. Where are we back to? We're right back to the highs of July of 2024. So keep your eye on there. We got a gap from December 9th, and you back things up to prior to the election. You're talking about 171 in terms of areas that you might see some acceleration here. You're at 192 right now. You drop down from there, and yeah, you're probably going back to 170. So critical area, as you can see, right? This area on Google, just putting a line on it here. That's about where you're going to open on Google shares. You break below there, the next natural line is 170, right there. So see if Google can hold this morning. We jump over to Microsoft shares. They're a little bit low with this market. You have the cloud providers trading a little bit lower. Amazon shares, they dip lower on those Google numbers as well. You're down by about $4 right now to 238 from 242. All things considered, just back to the open from yesterday for Amazon shares. Now, Amazon out with their numbers Thursday after the bell. Get into those. Disney out with their numbers this morning. A little volatility. You talk about it. The initial spike higher, the pullback, whatever they're saying on the conference call, the market likes it so far. You're going to open by about $1.70 higher, and you jump over to Disney. They top it on profit, but they start to lose Disney Plus streaming subscribers. Wait a second, right? They warned investors they expect another modest decline in subscribers. Folks, I love Disney. All right, I have Disney in retirement. That's not what you want to be seeing. Netflix is crushing it. Here's the only kicker. Netflix isn't going to tell you how many subscribers they get anymore. Why do you think that's the case? You think Disney's waking up saying maybe we shouldn't be telling people how many subscribers we're getting anymore if we're going to be charging ad revenue, and really all that matters is how much revenue and how much profit you're taking to the bottom line? And they beat on both. $1.76 versus $1.45. 24.69 billion versus 24.62. But guess what? Total paid subscribers, 124.6 compared to 125.3. Yeah. You had Hulu rising. Okay, Hulu's not going to make them all the money, folks. 53.6 million. Still, Disney Plus average monthly revenue per subscriber increased 4% to $7.99 due to price hikes. But that's an issue, man. All right, they better be up in the ante on advertising. We'll talk a little bit more about this when we get back, folks. Well, we got Disney. We got Google. We got Amazon tomorrow. We got a lot to talk about. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. S&P's down by 15 right now. And yeah, always an interesting day in the markets lately, it seems. We got volatility in both directions, as I keep stressing. My opinion would be to keep your losses tight. Keep those stops in place no matter what you're trading in this market. Try and let the profits run a bit if you can. Don't let them dip back into losses if you get some good profits in there, because you're going to have many opportunities, okay? You're going to have many opportunities. There's always the next trade. Okay. These are dramatic. You know, we have a VIX right now where you're not paying too much for volatility in this market. You got a VIX at 17. Okay. Now you got a VIX at 17 when just from where we were at the close last night, 50 points down, 30 points up, let alone the action we had yesterday, right? The acceleration at the open from 6,020, 50 points up. You back it up. And this is going to be a rolling basis as there's a lot in the air. The market is right to be changing very quickly because we're getting news events that are changing very quickly, let alone the earnings that are coming on top of that. And on top of earnings, before we get back to Disney, private payrolls. So we get non-farm payrolls on Friday. Private payrolls, this economy, man. The Fed was onto it. They had some of this data, I imagine. Okay, now they have some of the data in the jobs, I imagine. This is a tight market, man. Okay, there are plenty of jobs out there. They don't think inflation's on its way back. Remarkable, we have yields dipping a bit. We'll see if that reverberates a bit. We get the 10-year under 4.5 again. And I think the Fed is right. I said last Friday, man, that's when the spikes really went up on my back. Okay, think about it. We get the Fed. The Fed made some dramatic changes to their statement, folks. Chairman Powell downplayed that a week ago today. But in my opinion, they're worried about inflation, and they think the job market's tight. And this is going to be an important number on Friday when we get non-farm payrolls because we have private payrolls, 183,000. Yeah, quite a number in terms of adding. The market had added 176 in December. We increased that to 183, okay? And that is a revision to 176 from 122. So you're talking about adding 54,000 extra jobs in December. You add it to the 183. That's a number of 236 net. 236 net is the number that's above, and we were looking for 150. So net-wise, with revisions, which matter, okay, the revisions matter, you're talking about 80,000 extra jobs versus what the market was looking for. They all weren't added in January. That's not going to be coming down the line. But yeah, how about service providers who added 190,000 positions? All of the job creation came from service providers, folks. It's quite a number. Trade, transportation, utilities. Top sectors with 56,000 new jobs, leisure and hospitality at 54,000, education and health 20, manufacturing losing 13,000 positions. And when it comes to Friday, yeah, they're looking for about 170,000 jobs added in January with that unemployment rate of 4.1%. So ADP continues to expand its sample size for the pay measure portion, which is now at 14.8 million compared to 10 when it started. Pay for workers who stayed in their jobs, 4.7% annual rate. Actually going up. Look at that, right? Why does the Fed need to cut if people who are staying in the same job are making almost 5% more than they made the year prior, and that number is actually increasing? They're making more. That's a lagging impact on this economy that could cause inflation to spike again. There's action everywhere. Back to Disney shares. So, how about the entertainment division? 9% jump in revenue to $10.9 billion. Operating income for the unit increased 95% to $1.7 billion. And that includes direct-to-consumer, linear, and content sales, okay? Thanks to higher content sales and licensing. Yeah, they had some good movies. Moana 2 was in there. Deadpool and Wolverine, Inside Out 2. Haven't seen Inside Out 2. Deadpool, Wolverine, I have. The company said it expects double-digit growth in operating income for the entertainment segment with an increase in direct-to-consumer operating income of around $875 million. Yeah, the parks are doing well, but they're dropping subscribers, and not where you'd want to be when you're at their number in terms of you're only at 124.6 million. Seems like they have some space to go for growth, but it's all going to become ads, folks. That's the deal. It's all going to become ads. That's it, period. For those who really want the luxury of paying ad-free, you're going to be able to pay it, but boy, you're going to have to pay a lot of money because they're gonna eventually try and phase you out because they will make more money off of advertising. So think about that. It's going to happen. You don't have to look far. Look at any technology internet company, folks. We talked about Facebook, right? Facebook, they'd have to charge you $10 a month, $10 a quarter to use Facebook if they weren't selling ads. That's what's going to happen when you talk about Netflix, okay? It's going to happen. The prices are going to rise that high, but I think the companies are going to do well, and Netflix shares say so. As you're pushing $990, you hit $1,000 for the first time yesterday on Netflix. Pretty remarkable. All right, NASDAQ, we're off by 124 right now. Yeah, the NASDAQ, we've just been chopping around at these highs we had back in July of 2024, right? You spiked down there on Monday, and we're sitting at 21,546. We jump back to Google as we come into the opening bell. Yeah, Google down about $13. They're spending a lot of money. They're not bringing it down when it comes to revenue. And how are they going to monetize the $75 billion? That's going to be the question. But guess what? These companies, they're going to figure it out because they know the AI arms race is on. It's a generational opportunity, and they need computational power, and they need energy. NVIDIA up by almost $3 right now to 121. Stay tuned, folks. We're coming back for the opening bell.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got NVIDIA shares up to 122, up about 3%. S&P's down about 12 points or 0.2%. We check in on Google shares. Down $16 or 7.7% to the downside. We check out some of the other Magnificent Seven. Microsoft barely in the red, off by about 0.3% right now. Apple shares, they dip lower as well last night. Apple down 1.6% right now. We jump over to Amazon ahead of their numbers. Amazon dips lower on those Google numbers, off by 2.5% for Amazon shares right now. Excuse me, to 236. AMD, with their numbers, off 10%. Check out that one, right? Check out Intel shares, down about 0.9% right now. Whew, you talk about it. All right. What else we got pulled up here? Yeah, when you talk about yields, I'm going to jump over to the CME FedWatch tool because it is interesting to keep your eye on it. We get the 10-year under 4.5 right now. And so when you fast forward to the next meeting, we have the possibility of a cut. How about that, right? 16% chance. But I think that's pushing it, folks. Okay. Yeah, you go up to July. Let's see when the first cut. Man, this market's accelerating the cuts yet again. So we got about a 15% chance of a cut in March. We got about a 35% chance cut in May. And finally, you go out to the June 18th meeting, and the market thinks that just then, a preponderance of the probability that maybe we get one cut by then. You go to December, and this market's thinking 2 to 3 cuts. Excuse me. No, 1 to 2 cuts. Yeah, pretty remarkable. I think the market, maybe we get one cut, they're saying, and then we pause, right? Going to be difficult to get past 1 to 2 cuts throughout the year. I don't know. It seems like right now, man, the impetus with that change in their verbiage, I see no reason why they would have to cut. Yeah. And on the Apple front, you see the drop there, right? They've got some of that back, but that one having to do with the fact that, yeah, Apple shares fall, and it's China. So the trade war is looming, folks. This is what I mean about the volatility, okay? Don't think these headlines are going to stop anytime soon. Apple shares fall 3%. China reportedly considers a probe into the App Store practices. I mean, China's going to be searching for pressure points, and the biggest company in the world is going to be one of them. They're looking into policies that include Apple taking a cut of as much as 30%. We know they've taken heat on that in the U.S. and in the EU as well. Blocking third-party payment services and app stores. China's market regulator has not decided whether to formally open. I mean, it's all, right? They're considering tariffs. They're considering an investigation into Apple. It's all part of the negotiation. And so this is not going to get resolved overnight because it's going to be dependent on where we go, and it's going to take some months to really give any type of clarity, in my opinion. Yeah, Google dips a bit on the open. Disney shares, there you go, up by almost $3 or 2.7%. So they like the strength. They're not worried about the numbers in Disney. Remarkable, right? This market's making a change in streaming. They know that it's all about ads. Now, it's interesting. It's all about ads. I was talking about on the program yesterday that Fox is going to stream the Super Bowl on Tubi, T-U-B-I, their free streaming service that's ad-driven. And that might have been the best play of all, right? Fox waits. They do nothing about the streaming. They don't load a streaming service for pay. And maybe they're going to come in at the right time and just do it all with ads. They don't have to sign anybody up, right? No, you don't have to sign up at all. Just come watch our programs and we'll sell you ads. That's how the business was built, and that's how it's going back to, folks, because you can make more money, period. Yeah, and longer term on Disney, you're bumping up against the highs that we had in December. Look at that spike all the way up there. What was that? Yeah, that's just not a real spike. It is a real spike, but yeah. Yeah, it's a real spike actually to 118.59, huh? Yeah, it is. That's actually a real spike. You give it up. So be careful on Disney. A lot of volatility digesting those numbers. We go to Palantir. Quite a day for them yesterday. They give back slightly, off $1, but 102.25. You talk about a number, man, up there for Palantir. And it is going to be interesting, this story, right? That all shipments from China were stopped, and now that's resumed. Service says it will work with customs, collect new tariffs with the least disruption to package deliveries. I mean, imagine that. Every single one. That de minimis exemption is going to be gone. So anything under $800, man, you talk about a job. 1.36 billion shipments enter the U.S. using that de minimis provision in 2024. Double what it was in 2020. Yeah, and originally it was put in place because it was just very difficult for customs to handle all this stuff. People bringing back items, whatever it is. And goods from China and Hong Kong accounted for roughly a third of the imports in 2023 using that de minimis. So yeah, that's going to be a vast undertaking when you're talking about now. All of a sudden, you have more than 1 billion shipments. And if it was 1.36 billion in 2024, it's probably going to be 2 billion this year, right? And you're going to have to apply a tariff to 2 billion different individual parcels. It's a remarkable undertaking. All right, let's jump over to gold as we're having a record day, as has been the case. Gold backs off a bit from those highs, but we're trading at 28.91. And man, you know, on a longer term basis, this could be breaking above. Okay? You know, we are breaking above. But boy, you know, we have very little pullbacks, but you're talking about potentially, man. You ever get something like this, folks? You're talking about 3,300 in gold. It's almost been a straight trip higher. We haven't really had any dramatic pullbacks to give yourself a retracement. But pretty remarkable, gold is doing this with the dollar pushing at 107.50. Right? The dollar is at highs that it's been at for the last 2+ years, and we got gold strength. But we're going to come back. We're going to talk some currencies with our man Teddy Kegstad. Don't go away, folks. We'll come back with Teddy.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got S&P's negative by 9 right now. NASDAQ 100 off by about 103 right now. And we got higher price and lower yield today off that low price yesterday. The 10-year sitting at 4.45 right now. And we got the dollar at 107.500, we'll call it. And as we do every Wednesday, we talk to our man Teddy Cakestat. Teddy writes the outstanding Tiger Forex report, folks. You can check it out. Run under the newsletter tab. It's a great time to check it out with everything going on in this market, whether you're talking about yields, currencies, whether you're talking about the Fed or just tariffs. We have volatility in this market, folks. Check it out. You get a 30-day money-back guarantee. It's only $97. You can sign up while we're talking to Teddy right now. Teddy Cakestack, good morning.
Good morning, Tommy. What a volatile week we have going, huh?
Whew, and I don't think it's going to slow down anytime soon, Teddy. But yeah, we got action. I can always tell when I'll wake up in the morning, and not like I'm antsy, man. I enjoy the mornings. I wake up early. I'm with Tommy. But I can always tell when I'm really quick to look at my phone and say, where are the markets? Because everything is just moving so quickly right now, for sure. Where do you want to kick things off, man?
Well, it's been quite the wild ride. I like the fact that right now we have a little rally going on in the bond market, and we have a nice little slide going on in crude. You can see how it's impacting the U.S. dollar yen for sure. That's the one currency I have to say that I think is, we've been talking about this, how especially if oil can at least stay on its lows and if yields get an uptick, that we'd probably see no matter what, at least a sell-off in that market, and no matter what, if there's a divergence between other currencies or not. So, and then the whole tariff thing over the weekend, and I've been saying for a while, be very cautious about your holding your trades, especially in the currencies, because of the volatility that we're most likely going to be seeing for a while. And here we go, shabam, it's here, and I don't think it's going to stop for quite some time. I believe we're going to have some trends that get set eventually, but right now, I think we're in for a wild, choppy swing fest going on, man. You got to be nimble, you got to be quick, and you better be ready to duck and dodge.
I like it, man, and I agree, because I don't, and it kind of makes sense. There's a lot of variables that are changing pretty quickly right now. And so it would make sense. The market's trying to reprice those on almost a 24-hour basis right now. Coming into a new administration, volatility, and yeah, that yen, talk about a pullback. I guess what do you and you've walked us through the dollar and the individual currencies, which is pretty cool. And yeah, that yen, we got gold at all-time highs right now. What do you think about the DXY in particular at this price level, Teddy? We're at 107, 548. I have it right now. We've been consolidating between about 100 and 108 for almost 2+ years. What do you think about that dollar at 107.5?
Well, I think you're going to see some trends eventually start to manifest in the currencies, especially at least until we have, well, actually, I think what's going to happen is after we get a second rate cut, that's when you're really going to start to see some trends. Until then, I think we're going to be kind of like basically going back to the other end of the range, meaning that, yields are going to start to retrace, and they're going to start, remember that everything is already priced in that's been done. We haven't gotten to this extra half a point. So we could literally have a big retraction in yields. Remember that the Fed's been cutting rates and the market's been going up in price, as far as the cost of money. So now it's time for that rubber band effect to come back. Does that mean that we're going to go back to historic lows in that again? I'd be very cautious on that one, because I think that the Fed, no matter what, they don't trust in everything that's going on. Remember everyone that was like, you can't do tariffs, it's going to cause so much harm. Well, look at what it did. And within 24 hours in one country and 48 hours in another, we got everything we wanted, and all of a sudden the tariffs are off the table now. It's just showing, like, guess what? You can't have a long-term thinking about this stuff right now. And right now, I think the world is very reactionary, and we got to be ready for these swings, So, and these are things where I think that we're going to go back. The market's going to go back to the median price. Right now we've been pushing the outlier effect. So now we got to come back to that medium, and I think that's what we're going to do. You're going to see yields keep on retracing a little bit. I'd be cautious as a bull. I think you're going to see it be a grinding bull, and I think you'll see some harsh sell-offs. Anything that could give an inkling for yields to go higher, I think you're going to see a lot of fast money being made on the sell side. So, and that's going to impact the dollar too. So I think it's going to be a grind lower, as far as for the dollar index and the dollar against most currencies, because the reality, once again, still is that, we're talking about the yield fundamental. What about the economic fundamentals? Those outweigh it, and that's really where you have to look at it. So I would say, like, currencies like the Aussie and the New Zealand, any rally against the dollar they have is going to be short-lived. It should be viewed as definitely a correction and not the beginning of a new trend against the dollar long term. So with the U.S. dollar yen, that's another case. I've been talking about that one just because then you have the oil fundamental and the yield fundamental, that it's very easy for the yen to gain against the dollar in the short run, And see, this is another thing too, is that, remember that when dollar starts to come back again, our exports become more, potentially can grow in a lot of countries where they couldn't before, especially some of your smaller countries. So if you think about that, that also means that our exports, without even tariffs, foreign goods are going to cost a little bit more. So that could be good for our economy as well, as to help boost production here, because if things cost more that are coming from overseas, these are all little things. Those things take time to settle into effect. But I think that we're going to start to see that tide, happen probably, I would think, over the next 12 to 18 months is when we're really going to start to see those things. And then you're going to start to really see trends against like I said, Aussie, New Zealand, look at any rally against the dollar now as a correction and get ready to go join that long-term trend. Even if the dollar starts to fall against some of your other major currencies like the pound or the euro. But once again, those are countries too. Their economies are just in such shambles. I don't see any. I could see the dollar maintaining the range maybe that has been in for the past 2 years, actually. We might just spike a little bit higher and lower and maybe extend the top and lower part of that band of those ranges. But we may not see a real serious trend in the dollar index, but not necessarily certain currencies. Once again, like I said, I can see us have a nice trend in those lower base currencies for sure. The euro and the pound, I've been calling for it. I really think the euro is going to get down to parity. The Swiss, however, that's another one. Like, no matter what, even if the other currencies are getting beaten up by the dollar, I don't see the Swiss getting beaten up by the dollar as much. You know, their economy is not in shambles. You know, so that's a case for why, and that's the reason why the dollar index. You got to realize, even if the euro and the pound, which are the two biggest currencies in the dollar index, are you know, whatever they're doing, if the other ones are not going in the same way, that causes it to be more of a range-bound situation. So the dollar index is going to be a really tough indicator for currency traders moving forward over the next 2 to 3 years, just to let you know.
Man, you got so much great info. Can you hang with us for one more segment, Teddy? I wanted to get into some of, you talked about 2 rate cuts, and just kind of get your feeling when they may come, because I feel like they may come, but when? And just talking some rates and some yields. Folks, we'll be right back with Teddy. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. S&P's off by 16, NASDAQ 100, we're off by 118 right now, and we're talking to our man Teddy Kegstad. We're talking some currencies. We're talking some yields. So you mentioned maybe we get 2 cuts, and I was interested. I was looking at, the CME when they're pricing swaps in there. Maybe they're looking for 2 cuts by the end of the year. Do you have a timetable? Because everyone wants to know, when's it going to happen? Of course, the Fed, they changed some verbiage last week. They're a little bit more worried about the labor market being so tight and a little more worried about inflation. What do you think? When are those coming down the line?
Yeah, that's a really good question, Tommy. I think that the second rate cut will probably not come until the third or fourth quarter of the year. Reasonably, I would think that if they're really going to want to do this, I mean, I would be really surprised if they do it in one of the next 1 to 2 meetings. My biggest take is especially like inflation. I mean, gas prices have come down a little bit, but not that much. They're still not going down more yet, so that's kind of a big deal. And then you have to look at what poultry costs. I mean, I talked to a buddy of mine. He went to pick up a 1 chicken dinner at a restaurant the other day, $50 for a chicken breast, some broccoli, and a potato. You can get a pound of crab legs. A pound of crab legs. Seriously, I mean, when did a chicken breast dinner cost as much or more than a pound of crab legs? And I've never in my life. So when you look at that, I mean, I talked to my cousin in California. Eggs cost $7.50 to $8.50 here in Chicago. They cost over $12 in San Diego. But you know how much they cost in Mexico? They're like $1. And he's right by the Mexican border. It's ridiculous, but we're not going to see those price decreases come for a while. It's going to take 4 to 6 months to really see that, and that's going to hit us a lot. And inflation, I think, is here to stay for a while.
I would agree, man. And the Fed, they seem to agree with the way they changed that verbiage. They're a little worried about inflation. It's not going back to where they want just yet, so we'll find out. Teddy, I appreciate the great info as always, man. Have a great week. We'll talk to you next Wednesday.
Thanks, Tommy. Take care.
Thank you. Folks, check out that Tiger Forex report. Stay tuned. Basil Chapman's up next.